Hello, this is Richard Wilson at the Family Office Club. We're doing an investor mandate interview today with Dylan. Welcome, Dylan.
Hey, everybody. How's it going?
It's great. So
Richard, thanks for having me.
Yeah. Thanks for being here, and thanks for speaking in the past at some of our on some of our investor panels. So first off, what type of investor are you?
I am very singular focused, specifically multifamily. That's all I look at. I'm a one-trick pony. I focus on multifamily investing, and that's it. So nothing big, complex. I like to keep it simple in what I do best.
Sure. So sometimes multifamily investors do development only. Sometimes they do GPLP sponsor syndicated deals. Sometimes they invest in funds. Sometimes they run their own fund. Sometimes they do lending in the space. They're just doing bridge lending. Are you full food spectrum, like all the food groups of multifamily, or where do you focus most of your energy?
Yeah, good question. We really like the private equity side of the stack. I really have two focuses. Like for 2020, I know kind of the questions ahead of this interview or what are your mandate, right? So for 2020, really it's two focuses. It's one, kind of continuing with wealth preservation. So finding assets for ourselves and our family that we can hold long-term, 10 plus years, lend themselves great, it doesn't even have to be so much cash flow, but total return. It doesn't matter. Just a safe place to put capital. You understand. Class A type of assets. No new development. I've actually never done development. I've tried my hand at it many times. Considered it a few times, but we don't do. So all existing assets. And then our second focus for the year is really trying to align ourselves well with good owner operators who need equity for multifamily deals, and specifically value add opportunities, because we get a lot of stuff that's sent to us that's like our private portfolio. We like long-term wealth preservation. Strategy two is take capital and continue to have it grow as well too, right? And so when people are sending us opportunities, we really want to see that value add component. Because Richard, I get a lot of deals every day from people that say, hey, Dylan, here's this nice Class A stuff. Will you be an LP in it? Will you provide the equity? Like, if I'm going to do that, we just want to own it, keep it. We don't want partners. We don't want to participate. The stuff that we want to see and we want to look at are good value add multifamily properties. Usually 75 to 300 units is their sweet spot. We don't like stuff 400 units, 500 unit, 1,100 unit portfolios. And I can kind of talk about what the returns would be, in those specific areas as well. But aligning ourselves with good owner operators that know what they're doing, they have the experience and need just the equity side of it. That's all we focus on. So we don't do debt. We do just the equity component of the puzzle.
Okay.
Sorry, that was a long-winded answer.
No, I'm sure many people find it helpful though. So you're saying you'd come in as kind of the one LP and kind of JV with them on it. And basically like, hey, I don't want to have 20 other LPs in there with me. I want us to kind of own the asset and you help us manage it. Is that part of what you're saying?
Yeah, so I guess let me get specific there. So when people approach us for deals and they want us to place equity in their properties, I don't mind being an LP in the property. In fact, I really enjoy being the LP. I don't want to manage, right? I don't want to think about the asset. I did that for a long time. So we don't mind providing the capital, but it depends on, the amount of capital that's needed. Sometimes we have people come to us and they say, hey, Dylan, I only need to make up a quarter of the equity stack or half of the equity stack. And in those scenarios, we're pretty hands off. It's not until somebody comes in and says, hey, can you provide the majority of the equity? Then we're going to want typically some carve outs, right? And so just some decision making in terms of management, buy, sell actions, decisions over a certain dollar amount or threshold. But for the most part, we like to be entirely hands off. I don't want to, so we'll participate as an LP. I don't want to think about owning or managing or sit in the leasing office if the leasing agent quits or deal with any of that stuff,
Yeah.
So.
Yeah. Okay. Makes sense. What about geographies that you're open to versus prefer?
Yeah. So we're looking really at, if people are seeking an investment in equity, we're looking nationwide. And this is interesting. I am looking for some specific international stuff too, like Costa Rica, Belize, kind of down south, but nationwide here in the U.S. in high growth marketplaces. So they got to be stabilized markets. They got to be surrounding a major metropolitan area. But we'll look, I have like for our private portfolio, I have areas that I'm very specifically focused on. So like areas like Arizona, Portland, Florida, Michigan. Obviously, we're from Michigan. We love the Michigan market. I love the St. Louis market, Texas, that type of stuff.
Okay. Okay, great.
Yeah.
And what would be your number one piece of advice for an investor listening to this interview right now that, if you had heard this advice 10 years ago, it would have saved you at least $100,000 in wasted time or fees or bad returns?
Piece of advice. Say that again, Richard. I'm sorry.
Yeah,
piece of advice for an investor or somebody seeking capital?
For an investor.
Oh, gosh. I would say from an investment standpoint, just be like, we're very disciplined. I haven't strayed from my investment focus for a long time, and I'm thankful I haven't. And let me tell you what I mean by that. I buy assets, for example. I only focus on multifamily, but I buy assets that are in very specific kind of categories. Like people have asked me in this marketplace right now, Dylan, are you noticing a lot of defaults on rents and things like that? Are you noticing trouble with your tenants? No, because I focus on buying and being disciplined and focused, setting that criteria. But like for me, my assets are in areas where people aren't the restaurant workers. They're not the, grocery store workers. They're middle to high end type people that have steady corporate jobs, right?
Sure.
And that saved my butt in my residential portfolio in 2008, 2009. It's saving our butt now with our multifamily portfolio as well. So I would just say no matter what's happening in the market, just stick to your criteria. It's been hard because we got to look at 200 deals to get one, but that's okay, right? And so it's just being patient and then not, and most investors know this, not going outside of, what you do and what you know best. I mean, that's what caused us to weather a lot of storms. Right.
Yeah, that makes sense.
Yeah.
And what's the best way for someone to get in touch with you, Dylan? Is it, do you prefer LinkedIn or email or phone?
The best thing for me is to go to our site, and you can either schedule a call with me on demand. We have a nice little feature there. You can just click schedule. It'll show you. I set aside times every day for that. Or submit an email through the website as well. That's usually best for me.
Okay, great. Well, I appreciate your time here today, and then hopefully we'll be able to have you join us on one of our virtual investor panels, coming up here over the next 2 months as well.
Yeah, that'd be fun. Thanks, Richard.
Yeah, thanks, Dylan. Take care.
Yeah.